What's the cost of your own slavery? Cities of the worldwide whip take to the streets. The best sleight of hand we've ever seen. We sleep to be taught and we're taught by their dreams.
Good evening and welcome to the Live Register. Tonight we're going to look at the IFSC.
We'll be speaking with Harry McGee of the Irish Times, Shane Brett of Global Perspectives Consultancy and Jim Stewart of Trinity College Dublin.
The International Financial Services Centre, or IFSC, was the brainchild of Dermot Desmond and Charlie Haughey. In 1987, the Finance Act established the designation of an area in the city exclusively for finance, housing financial institutions, legal and accountancy firms. It was described as a city within a city. At the time, it was a physical location, stretching from Connolly to the O2 here behind me, but has since become related to any financial services company in Ireland. It contributes €2.1 billion tax every year, including 36% total corporation tax. Yet, while between 40 to 50% of the world's hedge funds are serviced in Ireland, they trade elsewhere and use Ireland for tax purposes. What exactly is a hedge fund?
Sure, so a hedge fund as opposed to, say, a pension fund. So just to give the comparison. So obviously we've all got pensions, you know, you put your money into hopefully something that will increase in value over time. And most of us would have pensions that would invest in fairly stable, like long-term stocks. So things like, you know, Coca-Cola, McDonald's, that kind of thing. And really what you're hoping is that the value of your investment will go up. However, with a hedge fund, it's slightly different. A hedge fund will can also make money if the value of a security or a stock goes down. So what they will do is they will actually bet on the price of a share. And that's just one of their main types of investments. So it means that, yeah, sure, they may want, you know, Ryanair, Apple shares to go up, but they may also have a view that in actual fact Microsoft shares are going to go down. And they will place a bet in the market that the share price will go down and they will profit if it does. Okay.
And how exactly does this relate to the IFSC?
So as I mentioned, most hedge funds are primarily based in London and in New York. But all hedge funds really worldwide have what's called an administrator. And it's because the way hedge funds are set up, they are enormously profitable for the founders if they make money. If you start a hedge fund, you get to keep 20% of all the profits you make. But that's with someone else's money. So someone gives you 100 million, you make 100 million, and you keep 20 million for yourself. Right. So it's very, very profitable. So because of that, there is a big incentive in hedge funds for people to be untruthful about their performance. And where that links in with the IFSC is hedge funds need a third party to act as what's called an administrator to basically value all of these assets independently. You know, like what an auditor does? When an auditor will review a set of books and say, yes, this is okay, this is wrong, you know, here's an issue, or if everything is okay. So hedge fund administrators do something reasonably similar. They value all the assets independently and tell the investors how much their investment is actually worth. Now, Dublin here in the IFSC is the #1 place in the world to do that.
In the world?
In the world, yes.
Really?
So, yeah, absolutely. So nearly half of all hedge funds are what's called administered from here in Dublin.
Okay.
So, if you like, that's one of the main things that if there's 30,000 people working in the wider IFSC through, you know, legal firms and consultancies, the hedge fund administrators, obviously, that's one of the main roles they do here. But 25 years ago, when the legislation was put in place in 1987, which is probably the worst year ever you could set up a financial location after the big crash. But basically, you had to get the incentives, to get the 10% tax rate, as it was at the time, you had to be located within a physical area, which was, you know, beside Connolly Station, that whole area of regeneration. And I think that was about over maybe 20 acres. And so what happened was, as it was very successful in the early 1990s, there was no more space, essentially. They ran out of office space. So they decided to build an extension onto that. And they also decided to allow participants or companies that were based in the IFSC to be located at other areas around Dublin and also Ireland now as well. So there's actually 9 or 10 hedge fund administrators or IFSC companies that are actually based in areas like Galway and Dundalk and Drogheda and Naas as well. So it's not just centred on the IFSC anymore.
Do you think it would be fair to say that the IFSC essentially operates as a tax haven, as some people have said?
I think probably largely yes. I mean, there are elements, there are elements of it which are tightly regulated. So in other words, what's called Irish domicile funds. And what that means essentially is that funds that are registered in Ireland and are regulated here in Ireland. So they tend to be European type funds. So, and they are, they are subject to Irish tax law all the same way. But there also is another element which is not regulated here really at all. So the IFSC in that regard has funds that the Irish that are set up here, but you don't actually pay tax on in Ireland. So essentially, if you're an investor in a particular type of Irish fund, well then you don't have to pay any tax to the Irish taxman. Exactly. So regardless of where you're resident in the world, and I should also say that Irish people aren't allowed to invest in them.
Really?
So yeah, so they're only open to non-Irish investors. It's
interesting that Bermuda is actually the largest foreign direct investor in Ireland, and actually our outward investment goes principally to Bermuda as well. Is the IFSC really contributing to the Irish economy? Is there really a net benefit for Ireland? So
there's a net benefit in terms of employment and in terms of so even someone like myself who was always going to work in finance, I'd probably be in London now otherwise, for example. So there is a benefit in terms of corporation tax, but just I wanted to just address your point about Bermuda, because that's a very good point. The reason why, and something we haven't really talked about yet, is that one of the major reasons why the IFSC also exists is to enable large international companies who are not even financial companies, often technology companies, to lower their overall global tax rate by basing certain of their subsidiaries or holdings here in Ireland in the IFSC. And that's the reason why you're seeing so much of inward investment and outward investment to Bermuda.
Right.
Because it's the way that US corporations, according to their law, structure their tax. They basically offshore a lot of their sales and their rights to Bermuda, who then pass it on to Ireland, who then tend to send the money back through the Netherlands because of Netherlands tax law, and then it can go tax-free back to Bermuda.
Okay.
So it's a bit of a cycle, if you like, and that allows, because of US tax law, it allows a lot of US corporations to keep their tax rates very low.
There's been a bit of coverage recently about the clearinghouse group within the IFSC recently in the Irish mainstream media. Much of the coverage so far has tried to frame the clearinghouse group as a lobby organisation, essentially something similar to Bernardo's or the Irish Farmers Association. Given that successive responses within the Oireachtas has suggested from both former Taoiseach like Bertie Ahern and also currently Enda Kenny that their department, under the Department of Taoiseach, is responsible for the clearinghouse group, it's hard to see how this can be framed as a lobby group external to government. When we look at the people who actually sit at the clearinghouse group meeting, we have people from the Department of Taoiseach, the senior civil servants of the land, we have people from the Department of Finance, we also have representatives from the Irish Banking Association, Merrill Lynch, Bank of America, KPMG, and essentially these people sit around this table and they draw up a lot of the legal framework and the financial framework, which is provides a platform, I guess, and working arrangements for everything that happens within the IFSC. Harry, you've been doing a bit of research around the IFSC and the clearinghouse group. I guess first off, I was going to ask you, how difficult actually is it to get information around, say, the workings of the IFSC and the clearinghouse group?
It's been very difficult. I mean, its existence has been known about for years. It's been there since 1987, Mark, and it's essentially, it was set up, I mean, maybe the purposes at the start were relatively admirable. There was this new idea coming in that Ireland would become a centre for the financial services industry, and many other European countries had a kind of a hub. When the whole idea was set up by Charlie Haughey and Dermot Desmond back in the 1980s, maybe the idea was a kind of a utilitarian one, or one that was designed maybe for the common goods, that you know, that they would work in concert with each other from the start, you know, to promote the industry, to make it bigger, and to establish it here in Ireland. But really it should have been a temporary arrangement, because you have an extraordinary situation. You have the clearinghouse group is essentially a group that comes together that's comprised of very senior civil servants and public servants in the state apparatus, along with leading representatives from the financial services industry.
Okay.
And they meet on a very regular basis. There was information released only a few weeks ago that showed that they have met almost 30 times this year, if you look at the group as a whole.
Year?
Yeah, the group as a whole, sorry, since March of 2011.
Okay,
But 30 meetings for the group as a whole, and the various subgroups or subcommittees that they have. And they meet in government buildings. The overall chair of the group is a guy called Martin Fraser, who's the Secretary General of Government. He's the top civil servant in the country. And if you look at the others who are involved, you get very senior civil servants from the Department of Finance, from the Department of Public Expenditure, from the Department of Jobs, from the IDA and Enterprise Ireland. On the other side of the equation, you get very senior executives coming in from the big banks, the huge international financial institutions, the big accountancy firms and the big legal firms, all of whom are involved in high finance. So the arrangement has been extant since 1987, but it's never been reviewed. And the question that you asked me was, how much do we know about it? We know a certain amount about it, but most of their meetings are conducted in private, and they cite privacy because of commercial secrecy and commercial considerations, but that allows them to cover most of the minutes and the proceedings in this shroud of secrecy.
It seems like the Clearinghouse group itself shows up that sort of nexus, particularly considered where we are at the minute with the sort of financial collapse that was mostly triggered by the shadow banking system, and this sort of the push for deregulation. Whenever sort of these organisations are pushing for stuff that benefits them for profit, actually are shaping social economic policy of a particular state that's meant to be representing people for the common good. I mean, there's a nexus there of sort of a political failure as well as a...
my difficulty is that it looks like the state is beholden to big business and to the financial services industry in the same way as the London government is beholden to the City of London. That has just a extraordinary influence and hold over the British government. But it does show very clear evidence from this year's Finance Act that the government is in thrall to the finance services industry. And I think that relationship is an unhealthy one. And I think that group is an unhealthy group and shouldn't exist and should be dismantled immediately. And I think they should make the representations in the normal way, as other industries do, the farming industry, the NGOs, every other business and civil society group. I mean, they are in a unique position in that they have this extraordinary access to the heart of government.
On the street behind me, you can see the offices of Depfa Bank. Depfa first opened in Dublin in 1993 and headquartered itself here in 2002. Its main business line was public sector bonds, which were used to fund valuable infrastructure projects across the globe. In 2005, it had an asset base of 220 billion euros, and it was the largest bank in Ireland at the time. Although there was a decline in profits in 2006, the company was considered valuable enough for hypo real estate to take it over. However, in 2008, the markets dried up. The bank faced imminent collapse, so the German government stepped in and bailed it out, costing the German taxpayer just over 100 billion euros.
Depfa was not very important for the Irish economy. It was located in Ireland and registered in Ireland, but most of its business was in Germany. And it then extended a lot of business into the US, a lot of management in Germany. Its seat of Depfa, the seat of management was the IFSC, but its shares were traded in the German stock market. It was to all extent affect a German bank, but located in the IFSC.
And it was a huge bank. Like, it was one of the biggest banks in Ireland, I think.
Yeah, one of the biggest banks by asset, but not in terms of employees. Relatively small in terms of employees. I think there might have been a couple of hundred max.
Yeah, that's it. So how come this hugely successful bank, which it was up until about 2006, how did it just collapse so quickly?
One of the problems with Depfa Bank was that they had huge borrowings. We call leverage or gearing, whatever you call it. It was absolutely vast. So the amount of equity that they had in was a tiny fraction. I think it was from 3 to 4% of the total amount that they had lent. So once interest rates changed, then they were very exposed.
So they had only 3% of their loans?
Of their loans.
That's all they could cover?
So what happened, they borrowed in the short-term market.
Yeah.
So in the financial crisis, 2007, 2008, interbank borrowing just shot up.
Yeah.
And they had to continue to finance that. So they were paying a huge amount of money for this borrowing, and also effectively they ran into a liquidity crisis, and the German government had to step in and lend the money. Now, in addition, a lot of the loans they made went sour. They had all sorts of issues relating to loans in the US, and some of the derivative instruments that they had, also they lost a huge amount of money in it.
Now, in a situation like this, when you see a bank fail so badly, a lot of people would wonder, like, was the regulator asleep and all of this sort of thing? Regulation
at the time in Ireland regarded the IFSC as not something that was subject to regulation. In fact, the regulator at the time said it wasn't his business to regulate banks in the IFSC. So the main advantage of locating the IFSC was low tax, so you got a lower tax compared with other countries, and also regulatory arbitrage. You were not regulated, or there's a very light touch regulatory system. The big thing about Depfa Bank is that it was taken over about 6 months before the crisis really broke by a bank called Hypo Real Estate. And this meant then that the German regulator was responsible for it. But it's very difficult to know what might have happened if Depfa had remained an Irish bank, because it was registered in Ireland, located in Ireland, and to all intents and purposes, it was an Irish bank. Yeah. The reality, of course, of most of its business and its seat of management was largely in Germany, that's where, and in other countries. But it's an interesting question to ask, what would have happened to the liabilities if it had remained an Irish-owned bank, supposedly? And I think that it would have been very difficult for the Irish regulator and the Irish state to have argued that they should not have put some money into Depfa Bank.
Well, I mean, the Germans put in over 100 billion.
Over 100, in current money terms, it's about 6% of German GDP. It's the biggest corporate failure in Germany in the current crisis.
There's no way we could cover that.
No, but they might have been asked for a contribution.
Yeah.
They could have been asked for a contribution of 18 to 20 billion. And there was a report in the Irish Independent about 3 to 4 years ago to the effect that the Department of Finance had been asked by the German regulator for a contribution, which had been refused. Now, that's just a report in the Irish Independent, whether there's any truth in that or not, but that's what they said.
Yeah. Now, the directors of Depfa, shortly before the bank collapsed, gave themselves quite a sizable bonus.
Yes.
How were they able to do that when the bank was on the brink of collapse?
I think that they probably didn't realise the extent of the risk which Depfa Bank was exposed to. Very, very high gearing. Yeah. And also that the various loans that they had made were also very highly risky. The kind of assets that they had and the kind of debt, these collateralized debt instruments or whatever, were also very, very high risk. So the problem with the financial crisis, all these things came together. Now, there were also some very eminent people on the board of Depfa Bank at the time. There was the former chairman of the Bundesbank, Tietmeyer. There was a former governor of the central bank, and there was a professor of economics from Trinity College also on the board. So they had a high quality calibre board. But the argument might be that the management knew what was going on and the board did not know what was going on. Yeah. So you don't know what went on in terms of corporate governance.
Well, if you're on the board, how could you not know what's happening with your company, surely?
It's very difficult to answer that question, because the same thing would appear to have occurred in relation to the Irish banks. Well, now, it's very difficult to know to what extent did they know what was going on, or to what extent did they just fail to ask questions, because maybe they were asked to be on the board because of their previous work and because of their credibility, and not because they had particular banking expertise in the particular area that Depfa was operating in.
Yeah. Now, obviously the German taxpayer was left with this bill, and we're in a situation now where we're after getting a bailout, and we're trying to get a deal on our bailout from Germany.
Yes.
Can you see a link between the two, that Germany might be reluctant to do a deal with us considering we cost them,
of course,
Depfa cost them?
Of course, German regulators and there are people in the German parliament who are aware of the issues that the IFSC created for German banks. And Depfa is only one bank that got into difficulties. There are various Landesbanks banks that got into difficulties, and IKB Bank has now taken over. So Depfa is the biggest, but it's only one of those. To give you an illustration, the current German representative on the ECB, a man called Mr. Rasmussen, when he worked in the German Department of Finance, he actually had to deal with IKB Bank. Yeah. He knows all about Irish regulation or the lack thereof. And I would say that a lot of German lawmakers would see Ireland and the IFSC as being a huge problem for them, and it's part of the drive towards tighter regulatory structures. Yeah. Because the idea was that each country regulated its own banks. So the Irish state regulated Irish banks operating abroad, and the German state regulated German banks operating abroad. But nevertheless, the location of those banks, the regulator where those banks were located, also has a role to play under previous rules. Yeah. And this is where it fell down completely. Nobody was really regulating these banks.
Yeah. So, well, the Germans can be very, very impressed with that sort of lax attitude towards banks in the
Not at all. No, I think, and there still is hostility in the German Parliament towards Irish regulation at that time because of the amount of money that they lost and the amount of bailouts that they had to give to these banks.
Now, just to bring it out wider, just to encompass sort of the whole IFSC, obviously our government places an awful lot, or seems to place an awful lot of importance on the IFSC and the role it plays in our economy. Like, do you think that's justified?
I don't think so. I think it's exaggerated. The IFSC and the various government documents claim that there are 33,000 people working in the IFSC. I think probably they mean IFSC type activities, because you can get IFSC benefits. You don't actually have to be located in the IFSC.
Yeah, that's right. Yeah.
But any studies that I've done indicate very low employment amongst IFSC-based companies. So one study of treasury management firms indicates median employment is 0. Another study I've done of financial vehicle corporations, of which there are 790 or thereabouts in the IFSC. Again, employment is 0.
So are you talking about brass plate?
Yes, yeah, the brass plate. But in addition, we have to remember that a lot of companies existed outside the IFSC, like AIB, Bank of Ireland, accounting firms, legal firms, and they have moved into the IFSC. So there has been some job creation in the IFSC, there's no doubt about that, but the amount has been exaggerated. And I think it's also rather risky, because a lot of IFSC activities, if you like, is really back office work for firms located in a real financial centre such as London or Frankfurt or New York. I mean, there are other firms located there. So this is very vulnerable to regulatory change in other countries, tax change.
Transnational, it'll just up and go if it wants, is it?
It could go just up and go, but also there might be a change in regulation or in taxation adversely affecting those. Now, having said that, the Irish government is very flexible in response to those companies, and the Annual Finance Act invariably has a load of changes, particularly to the benefit of companies in the IFSC, and that was true of the last Finance Act.
Yeah. Well, you have a situation where the Taoiseach's office sits on the clearinghouse group.
Yes.
And I think, what does the relationship say between the clearinghouse group and the government?
Well, it's very difficult to work that out, because the clearinghouse group is chaired by the Secretary General of the Department and the Taoiseach. There are people from the Revenue and the Department of Finance sitting on it. So the idea is that any issues that arise can be very speedily dealt with. Yeah. But also, I think it gives the problem that there is the regulators are compromised. There's a conflict of interest there between...
Because they're sitting on the clearinghouse
Because they're sitting on the clearinghouse committee.
So they're part of it as opposed to being over it and looking at it.
You could say, well, it gives them extra insight into the activities of IFSC companies and the particular issues they face. But there are lots of other industries in Ireland that would love that connection. And they would love to have the Secretary General sitting of a particular department sitting on the committee of which were acted in their interest.
think initially in the late 80s when Dermot Desmond had this idea, I think he imagined that there was going to be loads of traders like a mini New York or London. Now there was no way like investment managers or traders from London were going to leave and come to Dublin as it was at the time, long before the boom, with very high tax rates, for example, with lower salaries. That just wasn't going to happen. And instead what emerged wasn't a centre of trading, if you like, it was a centre for servicing those companies, right? So instead of, if you want to set up a fund worldwide, the best people to speak to are here in Dublin. The best legal minds, for example, are the best auditors, which will advise you what you need to do, and people have a lot of experience around regulation as well. Okay. But essentially, you're right. It took quite a while for the IFSC to bring in significant numbers of jobs, and where it has become very prominent worldwide around what I was saying, hedge fund administration, that really was not envisaged at the start at all. No, not at all. Hedge funds have existed for a very long time, but it's only in the last 15 years or so that they've really grown in size. It was really only at the start of this century that hedge fund administration became much more popular, and hedge funds really expanded in size.
Why do you think that became more popular yourself?
I think probably because there was so much easy credit going around, primarily. So if you like, also, I mean, a few reasons actually as well. I think that kind of came together. So I mean, globalization and the escalation of technology and really the ability for people to be located anywhere worldwide from a financial perspective and have the same information. You didn't have to be in New York or London or in Tokyo. And also, as well as that, people certainly on the investment side wanted a choice of more exotic or investment opportunities, if you like. So really, as a and then a really important point too, I think, is also the rollback of regulation as well. So regulation became more and more lax.
When did that start to happen?
Well, Bill Clinton repealed the Glass-Steagall Act, which was a famous act from the 30s that basically prohibited normal retail banks like your Bank of Ireland in the street from getting involved in investment banking, and that was really significant. And actually, Bill Clinton has said he since regrets that, and it could have saved us a lot of hassle. But certainly, that's an important point. But also, as well as that, on the investment banking side, companies changed their structure. So when you were an investment banker again in London or New York, you would primarily be a member of a partnership, and you were personally responsible for that money. So any profits that you made or any losses you took down to your own house were liable on your investments as part of this group. But a lot of the major investment banks like Goldman Sachs got rid of their partnership in the late 90s and early 2000s and instead became limited liability companies. So what that means basically is that they can't lose that much money. So they had an awful lot more of a, would you say, incentive to gamble on the markets, if you like, and that's where a lot of the money went into hedge funds. An awful lot of countries worldwide, Western countries, are obviously particularly struggling for tax receipts. The US, for example, the UK, France, Germany, Ireland has come up on their radar quite a lot as a jurisdiction of the IFSC specifically, where their companies are essentially leaving money offshore and paying very little tax on it. And I think that that's going to be addressed in the very near future. Already this week on Monday, Amazon were hit by the French government for a $250 million fine because they've used a similar IFSC structure in Luxembourg to pay an awful lot less tax in France. Okay.
So at the IFSC, you don't see that's not a unique institution in the world?
No, not in the world, but where it is very special in terms of Europe is that, again, it operates in what is still the only native English speaking Eurozone country. It also doesn't appear on any of the lists of black labeled tax havens. So and also, as well as that, to move money in and out of America, if you're sending the money from the Cayman Islands or Bermuda, it's heavily watched and often taxed extra, whereas the money from Ireland is not, or from the Eurozone in general.
Okay.
So I think the fiscal cliff negotiations coming out of the US over the next month or so, there's a lot of talk about closing tax loopholes, and I think that will have major implications for the IFSC.
So at the moment there's calls across Europe for a transaction tax on financial trading, but that's not being supported by the British government or the Irish government for fear of job losses.
Yeah, the British government are coming under a bit more pressure in the media to try and introduce a transaction tax, or a Tobin tax as it's sometimes called. And I can't really see the Irish government moving on this issue unless the City of London were to move first.
That's all for tonight. Join us again next week where we're looking at debt.
What's the cost of your own slavery? Cities of the world wide whip take to the street.